The millennials might have taken the headlines, but my Gen X brothers and sisters still have an annual income approaching $15 trillion. Income that will keep their favorite stocks heading higher. Hey Bowtie Nation, Joseph Hogue here, following up on last week's video on millennial brands with the 10 brands and stocks that Gen X, talking about my generation, cannot live without. Every year, ad agency MBLM conducts its brand intimacy study to find the companies consumers connect with on that emotional level. They measure that connection through 6 needs, as well as the depth and intensity of the connection to find those most beloved brands for each generation. And we'll be counting down through the 10 companies Gen X just can't live without, and the stocks that could jump higher. And let's get started with number 10 on the list of Gen X stocks, Nike, ticker NKE. But stick around because next I'm going to reveal back-tested results that prove loyalty pays in stock returns. Every generation has its iconic hero. The boomers had Joe Namath, and I guess for Gen X it was Michael Jordan, and Nike played that to perfection with the first Air Jordans out in 1985. Now by that time the oldest Gen Xers were about 20 years old, but all of us were trying to find a way to pay for that astronomical price of $37 a pair. Nike has dominated the market for sportswear ever since, growing its share to over 40%, with only Adidas even close to challenging it. And now with the massive $1.3 billion mistake Adidas made on Kanye West, Nike could extend its reach even further. Nike has grown its revenue from just $14 million in 1976 to $50 billion over the last year, almost a 19% annualized pace. Now that is well above the growth of athletic shoe market or the overall sportswear market, so there's definitely something there, a competitive advantage that is allowing Nike to leverage that normal market growth into even higher sales. Our shares of Nike, ticker NKE, have given back some of that pandemic surge. They aren't particularly cheap here either at 36 times this year's expected earnings, but profits are expected to rebound 24% next year, so a little better deal on that forward growth. We're just getting started on our list of Gen X stocks, but I wanted to show you the power of this type of loyalty brand investing. Now I looked to the returns on the most followed Gen X stocks over the past 10 years, starting in 2013 when Gen X was really putting that growing income into its favorite stocks. Over the last decade, the stocks have produced an average 16.5% annualized return, well above the 11% return on the S&P 500, and 4 of the stocks more than doubled that yearly return. And yes, I know, past returns don't guarantee the future, but Gen X still has strong income growth that could boost these stocks. Here we see research by the Brookings Institution on annual income by generation, with Gen X in red and millennials in green here. Gen X is expected to see its total income continue to grow, keeping pace with the millennials all the way to 2030, around $18 trillion. And these kinds of intimate brands are the ones most followed by consumers, more than doubled the profit growth of Fortune 500 companies in the 10 years through 2018. All from that sense of loyalty. Back to our list though, and an interesting contrast to those millennials, the Gen X supermarket is Walmart, ticker WMT. This was really interesting, what we saw last week with the millennials preferring Target, with it showing up third on their brand list, while Gen X was all about them low prices. I'm not sure what caused that shift in big box retailer, but I will say both stocks followed each other fairly closely for most of the last decade. But Target, here in red, for some reason got a much bigger pandemic bump. And more recently though, Walmart has outperformed on its higher percentage of sales from its grocery segment. Earning more than half its revenue from grocery has meant that Walmart continues to pull customers into the store even when they reduce spending in a recession. So that, combined with Walmart's focus on low prices, probably means the stock outperforms Target during a recession, while Target might do better when the economy is growing. Another point in Walmart's favor, though, is its greater share of the e-commerce market at over $67 billion in annual online sales, and that will continue to be a tailwind for Walmart growth. And that said, shares of Target are less expensive and expected to see massive earnings growth of 40% this year and 24% next to over $10.50 a share. Just on this year's expected earnings of $8.44 a share, Target trades for just 18.7 times on a PE ratio. For its part, Walmart is expected to post a decline in earnings this year and very mediocre growth until 2026. Their shares are trading for 24 times this year's expected earnings. So while Walmart might be the safer play into a recession, I think I've got to give it to Target here for that growth when the economy rebounds later this year and beyond. Now this is a solid list of stocks to watch, but if you want to see the stocks I'm buying for the next 30 years, my forever stocks, check out the link I'll leave in the description. It's a free report I put together with the Motley Fool, the 5 stocks I'm buying for 10x growth, my forever stocks. It's totally free. Just click through that link below and get your free report. Next on our list is our first overlap with the millennials. It seems GenX hasn't yet grown out of gaming with its Xbox and Microsoft ticker MSFT. There was actually a lot of overlap between the millennial and the GenX stock list. In fact, 6 of the 10 most popular brands were on both lists. Seems we're not so different after all. Millennials listened to NSYNC while Gen X had New Kids on the Block, and we both hold our heads in shame remembering it. We talked about Microsoft last week. Mr. Softy was an early investor in OpenAI, the company behind ChatGPT, and now has a $10 billion stake that gives it access to that AI program. It's expanding that access into Office products, and the use in Bing search has many wondering if it can finally unlock some of Google's market share. Now, Microsoft the stock has had an amazing year, up 33% on strength in that cloud and AI hopes. And while I did point out that shares look a little expensive here on 33 times a price to earnings basis, long-term investors can definitely make the case here that even if Microsoft gives back a little of this year's pop, the company should continue to produce those long-term returns. As for Microsoft's third-place market share in gaming after Nintendo and well behind Sony, neither of its competitors made the list for Gen X brands, so there might be still hope for that Xbox in the console wars. Next here, the only Gen X stock not traded on the US market, Samsung Electronics. And here I started to wonder if Gen X is maybe just a little bit more price conscious, preferring Walmart over Target, and with Samsung making the list. It makes me think that maybe as the millennial group ages further into family life, maybe they too will start bargaining shopping on those brands. Our next Gen X stock is another millennial overlap, Ford Motor, ticker F. Now, a lot of this could be due to the fact that the F-Series pickup has been America's best-selling vehicle for over 41 years, along with other iconic brands like Mustang and the Explorer. Whatever the secret to Ford's brand loyalty, that combined with valuation and the dividends make this stock a must-own for many investors. Their shares have almost halved their pandemic peak near $21 and pay a dividend over 10% a year. Now, the company did pause production on its F-150 in February, but maintains it can reach 150,000 annual run rate in production and a 210,000 run rate on the Mustang Mach-E by the end of the year, tripling last year's production of that F-150 Lightning. And here, if Ford can capture just even a fraction of the growing market for electric vehicles, it could make the current 6.5 times PE ratio look absolutely ridiculous. That dividend yield is return enough, but a run back to $20 a share, even if it takes 5 years, would boost that total return to 22% a year. It seems millennials inherited their parents' love for this one because Gen X identified with the Walt Disney Company, ticker DIS, as an intimate brand as well. Disney has struggled under political pressure as well as slowdown in streaming and ad revenue lately, giving up all its pandemic gains and basically taking the shares back 10 years. But I still think Disney has that content advantage when it comes to streaming, with their different studios creating maybe one of the only must-have subscriptions besides Netflix. Between the theme parks, media distribution with Disney Plus and Hulu, studio content through Marvel, Lucasfilm, Pixar, and 20th Century Fox, and its cable distribution with ABC, ESPN, and FX, Disney has just that synergy of content and the distribution that no one else has been able to perfect. And on a valuation basis, it's all Disney here. The shares trade for just 2 times revenue and 23 times on a price to earnings basis. That's less than half the 4.4 times revenue shares Netflix are priced at, and well under Netflix's 30 times PE ratio. And that might not decide the Disney versus Netflix decision, but I definitely think these two have the clear competitive advantages in that streaming segment and should be on your radar. As with the younger cohort, Gen X also identified with Jeep, owned by Fiat-Chrysler. Now again, since this is a private company, we won't spend any time here, but I was really surprised that both Ford and Jeep made the millennial and Gen X list, but only one car company made it on the Boomers' Most Loved list, and it was neither of these, so see if you can guess which it is in the comments below, and be sure to catch that video next week. We'll get right back to that list, but I'm curious to see where the Bowtie Nation comes down on this. What are the companies and stocks you can't live without? Don't think about it, just comment below with the first 3 companies or stocks that come to mind. We're into the top 3 Gen X brands with Netflix, ticker NFLX. Netflix started mailing out its DVDs in 1998, and it was immediately a blockbuster killer. It was the Columbia Record Club of our generation, and it's lived rent-free in Gen X heads ever since. And here, while shares of Disney do have the cheaper valuation and surprised everyone with that subscriber growth for Plus, Netflix is still one you want to be watching as streaming becomes a part of our lives, and that revenue growth around 5 to 7% expected for Disney over the next 2 years is closer to 8 to 12% for Netflix, though both are expected to post about the same 20% earnings growth. Now, besides the faster sales growth, that higher valuation on shares of Netflix could be justified on profitability, where Disney has seen its operating margin tumble from 17% in 2019 to just 7.7% over the last year. Netflix has increased its profitability from 13% to over 18% on that period. So shares are more expensive here, but Netflix is growing revenue faster and converting more of that revenue into earnings at a better rate. Number 2 on our list, and one of only 2 companies to make all 3 lists between millennials, Gen X, and boomers. Shares of Amazon, ticker AMZN. And we talked about Amazon last week, but there is a lot to like about this company. It leads the $180 billion cloud services market, an industry that has been its strongest growth driver for years. It's continued to build on its e-commerce dominance, now with nearly 60% of the market, with nobody else even close to it. And now just beyond the additional $1 trillion in value that could be unlocked in a breakup of those 2 main segments that, like we talked about last week, another undiscovered source of value in these shares is the ecosystem the company has built around it just to service that main e-commerce segment. Here, from marketing to production and delivery, whether it's B2B or B2C, Amazon can help, and it fits together to create that empire that is just going to keep on making money. I love to use Amazon as an example of why you should continue to invest through those bear markets. Shares bottomed here at 50 cents each in 2001 after that dot-com bust, losing 95% of their previous high. For investors that stuck it out, though, kept investing through, the stock has produced a 21,000% return over the last 20 years. Now, that is 210 times your money, turning just $5,000 into $1 million nest egg. But this probably isn't the kind of stock that's going to make you rich anymore. Not like that, anyway. You can still do very well, maybe 15 to 20% annualized return, but to replicate that same 20-year return, the company would have to grow to more than 2 times the size of the entire global economy, which isn't going to happen, but you're still going to get that great steady returns in double digits, so put this one on your buy list. We're coming up on the brand Gen X is most loyal to, but as much as I love my generation, I have to go where that money is, and that means checking out the video in the corner here, the top 10 stocks millennials can't live without. Also, be sure to tap the subscribe button so you don't miss next week's video on the top 10 stocks the boomers can't live without. While 6 of the 10 stocks overlapped between millennials and Gen X, it won't be the case for those boomers, where only 2 companies are found on our other 2 lists. And the company with the most loyal following of Gen X, Apple Inc., ticker AAPL. Apple is now nearly half, 45% of Warren Buffett's stock portfolio, with over 915 million shares worth $158 billion. At the annual meeting last month, Buffett reasoned that the company is just better run than any other he holds. Even better than Amazon, a $5,000 investment in Apple 20 years ago would have grown to over $2.6 million, and that's not even counting dividends. But like Amazon here, as a $2.7 trillion company, this one probably is in that slow and steady return bucket as well. Still, Apple has the kind of brand loyalty that any product it launches, it's going to have that instant following, and it's constantly leveraging that to grow its earnings. Get your free report, My Forever Stocks, with the link below, or click on the video to the right for the 10 stocks millennials can't live without. 10 stocks with the power of the largest generation in their favor. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.